Good morning from London. I'm Guy Johnson. I'm alongside Tom Mackenzie and Lizzy Burden. We're an hour away from the opening trade. So what do you need to know this morning? 25 or 50? The market can't decide. The Fed will decide at 2 p.m. Eastern. UK inflation data is expected to re-accelerate one day before the Bank of England announces its latest decision. The numbers will be on your screens in the next few seconds. And Hezbollah says Israel planted explosives in pages that killed 11 and wounded thousands more in Lebanon yesterday, Tom.
Let's check in on the markets then. The data across the UK dropping. I just had a quick look. It looks like it's bang in line with the estimates. Lizzy's going to break that down for us shortly. European futures currently in a holding pattern then ahead of that Fed decision. You'd have to be brave to be putting money to play in a significant way until we get clarity around the statement, around the forecast, and of course where they go 25 or 50. FTSE 100 futures currently down by 0.2%. Iron ore is softer again. We'll watch that in basic resources. The US 10-year at 364. A lot of money have continued to move into treasuries, of course. 40 basis point move lower in yields on the front end of the 2-year just since the end of May. The pound at 131, largely unchanged on the back of that CPI print. The countdown to the opening trade starts right now.
Wednesday the 18th, good morning everybody. Fed Day in the USA. We'll get to that in just a moment because as we've been saying, UK inflation data is out. It looks pretty much in line with expectations. Remember the Bank of England meeting today, results tomorrow. We'll get that announcement tomorrow at noon. Lizzy is going to break down all the numbers. Yeah, look, headline inflation bang in line with estimates, as is core and services. 2.2% at the headline level. Core going up from 3.3% to 3.6% in August. Services a rise from 5.2% to 5.6%. But look, this is not something to panic about. Services was expected to rise because of base effects. Again, volatile airfares, hotel prices. We can look under the bonnet in a moment. But the BOE itself, Guy, had penciled a rate of 5.8% for this month when it cut rates before. So there's wiggle room here. I think what could change the picture for the BOE is if the Fed goes by 50 basis points tonight.
I wonder if, given that inflation is in line with expectations, services and core 3.6% on core, is that enough then? Is 50 basis points, given what inflation's done right now? If inflation come in softer and you got 50, then you were making the case earlier, then that opens the door to a cut tomorrow. Guy, what do you think? Do you think to change it? Do you think if you still get 50, it's still the door
is Andrew
still
Bailey
open?
His own man, or is he part of a larger kind of central bank kind of groupthink story that we need to be kind of digesting at the moment? The ECB obviously has made its decision on rates. It's proceeding, but proceeding cautiously. The Bank of England, I think, is proceeding cautiously as well. But the Fed has a big gravitational effect. Yeah, I think the point is that now Andrew Bailey does not have the cover from the data if he does not want to have his own mind and follow the Fed tomorrow.
131 right now on pound, up 0.1%. That's largely down to softer dollar right now. So it's largely unchanged on the back of this data. We look ahead, of course, to the Fed and expectations. Look, the debate is there, 25 or 50. We've been hearing from various different voices, where it's Jamie Dimon or, of course,
they don't care.
Ray Dalio. It doesn't matter, 25 or 50. For a lot of us, it does matter, but I get it. The forecasts are going to be important as well, so the updates around the dot plots and the statement if they change the language, particularly on the balance of risks. So
what is the message, I think, is what we need to think about here. What message will they be sending with 25? What message will they be sending with 50? What does the press conference sound like, look like? What kind of questions is he going to push back on? What kind of questions will he not push back on? I think there's a number of different kind of aspects to this story, but I think the messaging is clear, and the destination is something that we need to think about as well. Where are they starting? Do they accelerate? Do they decelerate potentially, go 50, then you go 25? There's lots of different permutations here, but the messaging, I think, is really the critical thing here, not the number. Yeah, and the messaging leading up to this decision, as we've discussed in the Wall Street Journal and the FT as well, laying the groundwork for this 50 basis point cut. But it's interesting to see the moves overnight. The dollar jumping a bit, actually softer today, this morning, but not seeing much difference in the swaps pricing, actually. So is it just a sign of how feeble the market action could be after this decision?
What are the risks of going 50? I see the risk of going 25, not going hard enough, given the softness in the labour market. I don't understand the risks around 50. This looks more asymmetrical to me, or do you see the symmetry around this decision?
Well, is this an economy that needs 50? And is there a danger that you send the signal with 50 that you think there's a problem with the economy? The data at the moment, look at the nowcasting data, it all looks fairly solid at the moment. Is there a case for 50 or is there a case for caution and starting with 25? It comes back to the messaging. What message will the market take from 50? At the moment, the market seems to be getting much more dovish. So the market feels like it's dovish going into this. So the danger maybe is that we only get 25 and you get a kind of big negative reaction in asset prices. But does the Fed care that much about that? I would argue probably it takes that into account. So I think there's a positioning element to this, which I think is really important. But I think it's the message that it sends. The number isn't going to make a massive difference at this point. It's kind of where are we going? Do we need to accelerate this process? Do we need to think about an economy that is slowing down more rapidly than we anticipate? I think those are the questions we need answers to. And that's where I want to know. Is the Fed worried that the deceleration in the US economy is concerning? If it's not, and we're heading for a soft landing, then today's number doesn't really matter.
Okay. And I think that's the point that Ray Dalio and JB Diamond are making. It's about the bigger picture. Are there doubts about that soft landing? And the MLive team have been writing about that. They've said that 50 could actually lead to liquidity issues in the repo market. So it's all about how they position this 50 basis points move if they do it. OK, let's count that shot from Guy Johnson, play it alongside Dalio and JP Morgan's Jamie Dimon as well. The three big beasts of global markets weighing in, aligned on this view. Guy, right, stay with Bloomberg for continuing coverage from Guy and the rest of the team. The big Fed decision, of course, the Bloomberg Surveillance Special. The Fed decides starts at 6:30 p.m. London time. You really do, of course, want to be tuning into that. Guy's also scrutinising the politics and the palace intrigue of the EU, Guy.
Absolutely. Let's talk about let's think about what we've got coming up in terms of the story that we're developing here. You've got a commission that is now out. The French look like they've lost out. You've got the umbrella story to all of this is Draghi, right? Draghi's coming out and warning that we've got a crisis that is brewing in the EU. I think there's a number of different test cases that are coming up, one of which is the selection of the commission, and I think that's really interesting in terms of kind of how we're positioned around this and what that tells us. But the other one is, what is happening with this Commerzbank story and UniCredit? It just feels like a big test case to me. Do we believe that Europe can do better on banking union and various other things? Well,
before we get into that, on this point about France and whether France kind of lost out in picking the team yesterday, look, Macron's man didn't get the job that we expected he was going to get. But there was a really interesting note by Mujtaba Rahman at Eurasia Group yesterday saying that, look, Stéphane Séjourné is still going to be a major player here. He's close to Macron. He's flanked by senior French officials. He's still got the bulk of industrial policy and therefore the competitiveness portfolio. So don't underestimate how well France can actually do out of this.
Yeah, and to Guy's point, you know, if you can't get UniCredit and Commerzbank to come to some kind of merger or agreement, then where does banking union sit on this? And where is industrial policy when Intel has paused the build-out of factories in Germany and Poland? That is a major challenge.
I think we underplayed this story earlier on this week. And I think it's one of those sort of things that you think about with hindsight and realise the significance of it. That was a major blow to Europe as an industrial powerhouse. And you look at, as well, you've now got Italy pulling back on EV plants in battery plants in its country. You've got a crisis clearly emerging in the German auto sector. All of this speaks to a massive problem that Europe's got. And this comes back to Draghi. But that chip story, I think, is really significant. Europe, if it wants to be a player on the global stage, needs to figure out a way around that. And the next commission has to resolve that issue.
Yeah, it thought it had a response to the US CHIPS Act. It thought it has its response in terms of the subsidies and the tax breaks that they negotiated so hard for that Intel build-out. And now that is being put at risk, to your point.
Not much movement on the pound this morning. We'll come back to that story in just a moment. We've got plenty more coming up on the show. Jeremy Stretch is going to be joining us, head of G10 FX strategy at CIBC. We're going to be talking to him about what's happening with the dollar positioning. The yen, I think, is fascinating. What's going on with sterling. And why on earth is euro-dollar trading at 111? We'll try and get answers to all of those questions. The CEO of M&C Saatchi joining us to talk earnings, which have just dropped onto the screen as well. Fabiano Fedeli from MG Investments is going to be joining us on the markets. Tinkow Capital's Raphael Thuin is going to be joining us a little later on the show as well to talk about this build-up to the Fed decision a little bit later on today, Tom. OK, here's what else to be thinking about today then as well. The EU ruling they'll bill another one on Google's €1.5 billion anti-competitive fine. Pretty interesting as we talk about the competitive challenge for Europe. That comes later today and we'll break that for you. 10 a.m. UK time, we're going to take a touch on the inflation and price picture in the euro area, the final CPI. That will break at 10 a.m. And at 7 p.m. UK time, it is, of course, the Fed
rate decision. Don't forget, our programming starts half an hour before that with a build-up, and then, of course, Jay Powell's press conference half an hour later. The ECB's Governing Council members, meanwhile, Boris Vujicic and Robert Holtzman, will be speaking as well and maybe giving some clarity in terms of their views around where the ECB goes next. No doubt, of course, the Fed decision will play in to how we think about the ECB.
Absolutely. Let's talk about what else you need to know this morning. Microsoft and BlackRock are teaming up to invest in data centres and other infrastructure, supporting the boom in AI. The strategy aims to attract $30 billion of private equity capital, leveraging as much as $100 billion in total potential investments. Bloomberg has learned that the German finance ministry is sticking to its plan to sell its entire stake in Commerzbank, despite UniCredit's move to buy all of the shares offered last week. A decision on any further sales needs to be unanimous and achieve unanimous approval from a committee that includes the Chancellor, Olaf Scholz. And Iranian-backed Hezbollah is accusing Israel of orchestrating an attack that killed several people, we think 11, and left almost 3,000 wounded in Lebanon yesterday. A string of medical emergencies were reported across the country following a series of mysterious explosions of thousands of pagers. Israel has not commented on the events. This is clearly a serious escalation. Could you read it as de-escalation? I think it's very difficult to understand what is happening here. But clearly, the finger is being pointed at Israel in terms of the sort of the backing of this. Clearly, I think it also speaks to the idea of how difficult it is for these groups to communicate. They're using pagers, which to many of us feel like a piece of technology from a bygone era. But you do wonder whether this is something that is going to escalate or de-escalate the situation between Israel and Hezbollah.
That has to be the key question right now, doesn't it? And some geopolitical analysts, to your point, were suggesting that maybe this is de-escalatory, given the tension that's been unfolding, of course, in recent months between Israel and Hezbollah. Israel could have gone for more conventional attacks on Hezbollah and its infrastructure. Instead, they went for this. That's one argument being posited. The other argument, of course, is that Hezbollah will be compelled, and Iran as well, to respond in one way or another. It's a reminder as well that Israel's intelligence services, if it is Israel, Shin Bet or Mossad, then given the failures, of course, leading up to October the 7th, they have now come through with, from their perspective at least, a number of successes. Again, if this is Israel, given the assassinations of key Hezbollah leaders, Hamas leaders, and now this apparent attack.
Yeah, we should say Israel's being blamed, but it hasn't taken responsibility or blame for this. And we
but it never does.
No, and we should also note that the oil price moves were quite limited, and Brent now lower 0.5% at $73 a barrel.
So we have a live shot from outside the American hospital in Beirut right now as we talk about this. Of course, hospitals were largely overwhelmed as a result of this pager explosion incident yesterday.
OK, so we'll keep across that. But coming up on the programme, Ursula von der Leyen's new team. We're going to discuss the new European Commission leadership and what it could mean for competition policy. And also, Stellantis facing industrial action in America. We'll check on the stock at the open. But up next, today, it's, of course, all about the Federal Reserve. Is it going to be 25 basis points or 50 basis points? Plenty more on that debate. But if you've got questions of your own for our guests, please do send them in to us via IB plus BBTV Go. This is Bloomberg.
Cycle and all of this, they're losing sense of the bigger picture. 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
Bridgewater's Ray Dalio speaking to Bloomberg at the Milk and Asia Summit in Singapore. He thinks we're all getting overexcited about whether or not it should be 25 or 50. Jeremy Stretch, head of G10 FX strategy at CIBC, joining us around the table to continue the debate as to whether or not it's 25 or 50. Good morning.
Good morning.
Do I want to be long the dollar into today's decision?
I'm not sure you do. I think we know that the Fed will be cutting rates, clearly. It's the magnitude of the move today, but I think it's more about the signalling that we get from Chair Powell. So I think we are probably going to see a more aggressive easing profile than even the market is anticipating through the course of the rest of this year. And if we do see that sort of mentality playing out, then I think it is going to be a case of a cheapening dollar. If we see 25 today, we might see a little bit of a lift in terms of the dollar valuation, but that I think will just provide better opportunities to sell into.
The problem I have with all of this is that I see a European economy that doesn't look great. UK economy, we'll talk about that with Lizzie in just a moment, looks okay-ish. I've got euro-dollar trading at 111.22, yet I'm seeing data out of the US economy that speaks to an economy that is still relatively strong. The numbers in FX land feel like they don't reflect the reality of the situation on the ground. Why?
You're right that obviously when you look at 111 in euro-dollar and you look at the underlying dynamics in the Eurozone, particularly in Germany where we see inherent weakness, particularly on the manufacturing side, we saw that in terms of the ZEW yesterday as well, you could say, well, it looks a little bit mispriced. But of course, what we're seeing is that this sort of movement that we've seen in spreads at the front end, whether it's two-year spreads, whether it be in 2S Treasury yields, that move has really sort of amplified that sort of retreat in terms of the dollar's valuation. And investors are looking to exit dollar positions and looking at alternatives. Now, the euro doesn't look particularly good on a pure macro story, but I think it is that alternative strategy. And, of course, if we look outside of the manufacturing sector, services are still holding up relatively well. It isn't the driving factor of the Eurozone economy, but it is still the case that service growth is offsetting some of that weakness that we're seeing in German manufacturing in particular.
So, Jeremy, just building on Guy's point, you don't think, then, that the market is underestimating how far the ECB will have to go to put a floor under this economy?
We're in a scenario where now the ECB have started that policy easing process, but I think in the context... Reluctantly, yes. And I think in a sense we obviously have to think about the confines of the ECB. The broad nature of the policy remit of, or the broad differential between the members of the governing council. So that makes it very difficult for President Lagarde to actually sort of engineer a policy narrative. But I think it's going to be a slow and progressive process of easing through the course of this year. And on a relative basis to what we're expecting from the Fed through the course of the rest of this year, those spread movements which have been so integral to the valuation of the move in euro-dollar, I think will still keep euro relatively well supported and or will potentially still open up the possibility of going a little bit higher. But once you get into the 112, 113 area, it feels as though the air is a little bit rarefied, at least in the near term, looking at those underlying fundamentals in the Eurozone. You
can imagine over in Japan, the BOJ will be sitting as well on tenterhooks leading up to this decision. The yen is up about 4% versus US dollar just in the last month or so. Has too much been priced into the Japanese currency at this point? Where do we stand on that?
Well, we've seen an enormous swing in terms of positioning. So we've seen a big reversal of the sort of the carry trade dynamic, and obviously the BOJ has been part of that in terms of the policy.
Is that done, the carry trade?
I think it's certainly been parked for now at the very least. So I think in the context of the BOJ, it is that presumption of how quickly will they come back to adjusting policy. Now, we think that the market may have got a little bit ahead of itself in terms of that context. We still think it may be later in this year or maybe even early next year. But ultimately, I think it is the story where we can and would expect the spread dynamics still to be very much in play. And obviously, if we are going to see a much more aggressive Fed, even than the market is anticipating, so we're looking for 125 basis points of easing between now and the end of the year, then that is probably going to act as a headwind in terms of those that have been long of that dollar-yen trade. And I think it's probably going to be a scenario where we're selling rallies rather than buying dips.
Jeremy, if I can bring us to the pound and the UK, we had CPI in line earlier, the pound a touch higher. If the Fed tonight does go by 50 basis points, does the BOE need to follow because of the sterling effect? Because it would keep growth on brakes?
Well, a lot of people have been asking me about what happens if the Fed does 50. What's that reaction function in terms of the Bank of England? Now, we know that obviously the central banking community are always in clear contact and will be trying to understand how each other are thinking. Does it necessarily change the reaction function of the Bank of England? I don't think it does. I don't think it changes tomorrow's decision. And I don't think it changes the magnitude of policy easing that we would expect through the end of this year either. Now, obviously, if we do see a 50 basis point move from the Fed, it does have an impact in terms of how sterling trades against the dollar. But I think from a broader perspective, I think it is still this bias that sterling, I think, will get a progressive bid on the basis of a recovery narrative in the UK, which plays out into 2025.
But what about in the budget on October the 30th? What about the tax rises that we are many expecting? Do you think the market isn't yet fully pricing the slowdown that could entail?
That, I think, is the interesting dynamic, and that's the underlying factor that we don't know how much of a fiscal tightening we're going to see, how much of the balance of this projected shortfall that the government keep talking about in the fiscal projections will be filled by tax hikes and how much will be filled by additional borrowing. So I think that is going to be the split, and so that may provide a little bit of an opportunity for a cheaper value of sterling and provide an opportunity to get into longer sterling positions at better levels. But I don't think necessarily it's going to change the narrative unless there is going to be something very significant in terms of the fiscal tightening that we're not necessarily foreseeing.
Lizzy, if they go 50, if the Fed goes 50 today, what are the risks of the Bank of England doing nothing? Does the risk of doing nothing increase in a weird way? In as much as you get a significantly stronger sterling, you get other factors that come into the mix that you need to think about. Does it change? Does it make it riskier to not cut, I guess, is the question that I'm asking.
Well, this is exactly what I'm saying. The pricing for a BOE cut has increased because of the chances of a Fed 50 basis point cut increasing. It's not because of the UK data, it's because of the sterling effect and the higher pound holding back growth. I'm not saying that Andrew Bailey doesn't have his own mind. I'm not saying he just copies what Jay Powell does, but you have to think about that transmission effect.
Well, I think it's not just even the transmission effect. I think it's also the impact that we will see across the piece in terms of what's pricing in all global interest rate markets in the context of what the Fed does, because as we know, the Fed does have that signalling effect. So if we do see 50, then I think we will see things like the Bank of Canada amplifying rate cut expectations into its own next meeting. So I think we will see the market in general implying a faster pace of policy easing if the Fed does a 50 move at the first order. I think it's probably more prudent, though, in a sense, for the Fed to say, we've started the process by adjusting by 25, but then Jay Powell will have the opportunity in the press briefing to outline the trajectory of the Fed from here. And I think that's probably the more likely scenario to play out today.
Jeremy, I know G10 is your wheelhouse, so maybe there's a slightly unfair question, but we have seen some flows into some of those smaller Southeast Asian nations in terms of expectations around a Fed cut, those EM flows into credit and FX as well. How much of that has further to run, do you think, in terms of the upside for some of these EM names?
Well, obviously, we have seen a substantial repricing in terms of some of those EM currencies relative to the dollar, and I think it is still very much the case that we are seeing that retreating dollar bias encouraging inflows into other markets. Clearly, if the Fed is going to be, as I say, an aggressive beast in terms of its policy easing once we start that projected process, then I think we do start to look at investors looking at alternatives. And I think it's the case that we've obviously had this projected period or this prolonged period where the dollar has been first amongst equals, the exceptionalism in terms of the growth narrative. I think as we move into 2025, if we are going to see a broader sort of growth trajectory and a narrowing in terms of the growth differentials in the US relative to elsewhere, then I think we move back towards the sort of the centre point of that sort of dollar smile argument. And I think that probably implies that we do see greater resilience in terms of those growth-orientated, the commodity-orientated currencies, or those that benefit from flows relative to the dollar.
So how's the market position going into today?
Well, I think the market is nervously positioned going into today. So I think we've obviously seen, we've obviously seen positions being taken off in the context of today. I think market is going to be very jumpy and jittery.
So volatility today, or
I think I think until we get to 7 p.m. London time, it's going to be a pretty lacklustre session, one suspects.
But after that,
it could get pretty volatile because obviously we have the Fed statement, we have the dot projections, we have the economic forecast. And then we get Jay Powell. And as we know from Jay Powell, he will read his statement and then he has to take questions. And then that opens up some potential scope for some volatility.
He has been very dovish in his last few press conferences.
Going back to December, quite clearly.
Jeremy, nice to see you. Thank you very much indeed. Jeremy Stretch, head of G10 FX strategy at CIBC. Coming up, we're going to talk to M&C Saatchi. We'll talk about the UK advertising market. What about AI? All of that conversation in our next conversation. This is Bloomberg.
We are 30 minutes from the start of the opening trade. Of course, all the focus is on what the Fed does. Do they go 25 or 50? To what extent are they going to adjust the statement? And, of course, the forecast as well. Let's check your markets. Jeremy Stretch on the FX side saying you're going to have a bit of a holding pattern until you get the decision and then maybe volatility on the back of that. The decision, of course, at 7 p.m. UK time. European futures currently flat, reflecting that wait-and-see approach. The CAC current in similar territory. S&P futures just nudging up just shy of 0.2%. In the bond markets, there's been a lot of moves into the 2-year. Yields down 40 basis points since the end of May. There will be potentially some volatility at the front end, most sensitive, of course, to the rate cut expectations and signalling. Currently, in terms of sovereign debt in the Eurozone. You're getting 2.14 on the German 10-year. That yield spread versus oats over in France, with the French 10-year is still there on the political risk story, 285 on the oat 10-year. Italy, BTP, 349. Now, the European Commission President Ursula von der Leyen, talking of political risks, has drawn the battle lines for her second term in office. Yesterday, she unveiled a top team tasked with boosting the EU's lagging competitiveness.
The whole college is committed to the topic of competitiveness, decarbonisation and digitalisation. So this time with this new college, we have kind of dissipated the former relatively rigid stovepipes that we had. And this is one of the main recommendations of the Draghi report: more fluid, more intertwined, more coordination of the different policies.
OK, let's get more on this story with Bloomberg's Oliver Crook standing by for us in Berlin, following all the twists and turns. Ollie, talk us through the lineup that we see and who holds the power. Has Spain stolen a line on France?
I think it really has, Tom. I think that is sort of what we take away from this. And listen, we've got so many names, so many jobs, so many committees, all this sort of stuff. So we're trying to cut through the noise a little bit and see kind of who got the actual power here. And you mentioned it there, Teresa Ribera, who's coming from Spain, who has a background in sort of climate over in Spain, is now coming to be the head of both competitiveness and competition. Let's draw that distinction a little bit. So this is both the commission that Margarita Vestager had formerly, which is one of the most powerful within Europe. When we think about European power, it's usually exerted through money, giving out money, the carrots, and the stick, which is regulation and fines. And this is one of the most powerful in terms of the stick, right? This is where we get multi-billion-dollar fines to the massive tech companies. So that is only part of the job, right? In and of itself, it was already one of the most powerful. Now add to it, it is also the sort of anchor on the competitiveness question within Europe, and really the Draghi report. So this is also doing all of this and transitioning this economy, and doing so in a carbon neutral way. So this is an absolutely massive portfolio. Add to that, though, also attached to it is the French side of it. Stéphane Séjourné, the former foreign minister, he's 39 years old. He's part of Macron's Renew Party. He was also the one that they sacrificed Thierry Breton for. He also has a sort of comparable role, but this has to do more with industrial policy and making Europe an attractive place for people to do business and prosperity. And this will also deal with things like the Capital Markets Union and banking. So for the business community, I think this is a crucial role. We also have, in the form of Italy, Raffaele Fitto, who's going to have the cohesion policy. This has to do with European development. Again, that sounds a bit abstract. The reason it's important is because this is a huge carrot. This has 400 billion euros that they can disperse across Europe. So this is one of the powerful roles as well. Another executive vice president, is Kaja Kallas. We've known about this for a while, foreign policy. But these are really going to be the protagonists going forward here in Europe. There's going to be deliberation now at the parliamentary level. Some of these names might be sent back, but then you get that final vote, and everyone in Ursula von der Leyen would like to get everything in place for the new commission on November the 1st.
Ollie, in theory, this is the von der Leyen Commission, but is it actually in reality the Draghi Commission? And I'm wondering how big an influence he has in the way that von der Leyen has structured all of this.
I think it's absolutely crucial to it, and I think it's one of the foundational premises, right? So let's talk about the physical structure first. She's done away with all of the vice president roles, so now you, instead of having vice presidents, you have commissioners and executive vice presidents. Formerly, you only had 3 executive vice presidents. Now you have 6 of them, right? So that is on this structure. But the point that you're making, Guy, which is, I think, precisely a very good one to make, is there's also a structure, but there's a spirit. There's a spirit behind this entire commission. And while previously was, carbon neutrality, all that sort of thing, and that is still an important part of it, but there's a difference now. There's the war in Ukraine, so defense is part of it, but fundamentally, it is a question of competitiveness. And when we think about what a so-called Draghi Commission looks like, it is a partnership, I think, fundamentally going to be between Ribera and Séjourné, these two commissions coming together to try to boost European competitiveness. But there are also sort of side things on this as well. We also have the Trade Commission, which is no longer an executive vice president role. That is going to be led by Šefčovič. We also have the Economy and simplification, crucially. That'll be led by Dombrovskis. Both of those are not executive vice presidents, but they report directly into von der Leyen, and they will all have to work together, Guy, in order to boost that competitiveness. Because, again, the fundamental warning that Mario Draghi has made is basically that Europe is sleepwalking towards being completely obsolete, and if they don't do something now, like right now, that is going to be the story of Europe.
Ollie, we'll continue the conversation with many of our guests this morning. Thank you for setting it up for us. Bloomberg's Oliver Crook joining us out of Berlin. We are going to be speaking to Stéphanie Yoncotin, French MEP and member of the Renew Europe Party. Her view on this European Commission at 9:30 a.m. UK time. Lizzy.
Well, let's get back to some of the earnings that we've had out this morning. Dropping at 7 a.m. from M&C Saatchi, the UK advertising firm, of course. It says it is on track to deliver market expectations for 2024. You've seen adjusted operating profit for the first half, £17.5 million. This is against £9.98 million year on year, so a rise there. And we can speak now to the CEO, Zaid Al-Qassab. Good to have you with us round the table this morning. You came in from Channel 4 to lead M&C Saatchi. You would expect there to be a kind of transformation in these numbers. How would you say that transformation's going?
Well, these are a strong set of numbers, as you said. We're growing like-for-like net revenue 6%. The transformation is helping to turn that into a 40% improvement in operating profit on a like-for-like basis. And we set out at the beginning of that transformation journey and said by the end of this year we'd deliver £10 million in annualised cost savings, and we're on track to do that.
And then we also have been talking about inflation, the latest UK inflation numbers dropping this morning. Does that mean, because it's coming down, that your clients will have more to spend on advertising as the year comes to an end?
Well, firstly, I'd say we're a global business. We're fortunate to have a really strong portfolio all around the world, and in terms of the different services that we provide. So certainly very, very well protected and resilient against individual inflation moves in different places.
But globally it's falling.
Of course, lower inflation and businesses with more to invest is good for our whole sector, and these results show that it's good for us.
Let's just kind of break it down. Middle of the P&L, clearly you're taking costs out of the business. That is being reflected in the bottom line. Those are being reflected in the numbers that we're seeing at the moment. Just talk a little bit about the top line. Are your clients spending more or less at the moment?
Well, as 6% net revenue growth shows, yep, we're able to deliver growth through...
Is that more clients, or is that current clients spending more?
It's a combination of both, actually. So,
right,
you know, winning clients over this period, including McDonald's, including Danone, including Ford, but existing clients that we've had on the business for many years, so Heineken, Adidas, the NHS here in the UK. So it's a combination.
In terms of what you're seeing with your cost-cutting efforts, how much, as you think about the business going forward, how much of what you are going to do is going to be AI-driven? How much are you spending currently on that AI story going forward? How big an impact is it going to have on advertising and your business in particular? If you're thinking about where the costs are going to come from and come down, but also where spending needs to be made, how are you factoring that in to the kind of more medium-term plan?
AI is a really important tool for businesses to use, but it's an enabler.
Right.
So the trick is to see how AI fits into your business and enables you to deliver your core services better.
Right.
We're using AI in a number of ways. We've got a number of technology products that we already have with clients that are AI-enabled, that allow them to understand their business better, deliver creative better, see where the future is going to go better, monitor their competitors. So it's an integrated part of what we do and what the service we should be providing.
Zaid, what do you think that means for the jobs market across the advertising industry? I mean, you have now multimodal models, so models that can generate, of course, audio and video as well as text. For creatives, for copywriters, they're using that at Saatchi right now? Are they using these tools right now? And does that mean that you just need fewer hires because you have people who can do more with less?
Of course, we're using a wide range of tools, but I don't see it that way any more than the internet was hurt jobs. These creative tools and digital tools enable you to do more. We've talked for about a decade or more about personalisation at scale. Until now, that's just been a dream. That's something we can now do, and that unlocks further revenue and further opportunities. So I see it as enabling our business to do more and enabling our creative people, which is the heart of what we are, to do even better in the way they serve their clients.
Are you hiring more creatives or more computer science engineers right now?
Well, that's a dichotomy that doesn't really exist in the modern world.
Okay.
Creative people are able to use these tools and know how to use them, and the beauty of many of the AI tools are they're accessible to people who are creative as well. So that's the heart of our business. People come to us for creative solutions, and that'll always be what we do. How we use AI to deliver those creative solutions is the trick.
But do you see some clients more resistant than others to adopt AI?
Well, I wouldn't like to comment on individual clients, but our whole industry is adopting AI. You can see in our strong set of results that it's the sort of thing that's going to power our revenues and profits in the future. It's an important part of what we do, but so are the creative people who come up with the brilliant ideas, and that isn't going to go away.
I'm interested in what you think about the role of AI in politics. I don't know if anyone else has seen that video of Elon Musk and Donald Trump doing Staying Alive thanks to AI, but anyway, I digress. What do you think is the role of advertising in an election year like this when you have AI there as well?
Look, I'm not a politics commentator, but all I can say is that it offers opportunities, and businesses need to use it responsibly. We have policies and codes of how we use AI responsibly, and we declare when we use it. So that's where our position is.
Is the US election cycle factored into your outlook at this point? I mean, they have deep pockets, both candidates. You're going to benefit from that.
Well, look, we're a global portfolio of businesses,
yeah.
And obviously election cycles are part of what we do. But there was a UK election cycle in these results, and we delivered
different in scale.
Delivered very strong growth in this
US,
period.
Right?
Yes, and we have US businesses which of course will be doing their best during this election cycle.
Okay.
The big picture conversation we're having here today is about interest rate cuts, whether or not the global economy is heading towards a recession, whether the Fed needs to be lowering rates, whether the Bank of England needs to be lowering rates. From your chair, does it feel like we're seeing a global economic slowdown right now? What are clients telling you? You have ongoing conversations with all of them. What is the message that you're getting? Is this a global slowdown that we're seeing at the moment, or is the economy just fine?
Well, these results don't reflect a slowdown. From our point of view, all I can do is what I control, and that is to deliver this strategy, deliver the transformation program.
But you're having a conversation with them. Are they sounding glass half full or glass half empty?
Well, I mean, you can tell from our results that on the whole, our clients are optimistic about the future. Yes, we live in a volatile market. Of course, that's true. But we are able to deliver what we need to do, and the things that we control are going very well.
Just finally, if I can come back to Elon, to what extent are advertisers' views on X holding up? It seems to be where they're cutting spending.
Well, spending on X is not a key part of our business. It's an important facet of social media. Many brands will choose to use it, and many won't, and that's up to the individual clients. But in terms of the total market, it's not a driving factor.
OK, really good to have you around the table. Zaid Al-Qassab, M&C Saatchi CEO, off the back of their results this morning. And coming up on the programme, Reckitt takes another step closer to selling its home care assets, which could fetch more than £6 billion. More in our stocks to watch next. This is Bloomberg.
Nearly 47 minutes past the hour. We are waiting for the opening trade here in Europe. At the moment, it looks like we're going to see a fairly flat open. I think you're going to see a quiet session until, obviously, we get the Fed a little bit later on. That is going to be the prime volatility event that the market is going to have to deal with today. It's been waiting for it for a long time. Let's discuss how we are set up into that meeting, that announcement, that news conference. Markets Live executive editor Mark Cudmore joins us now. Mark, swaps have got 40 priced, which means 50 is priced. What message does 50 send to the market, to the global economy?
I think the key message is the extremely dovish reaction function of the Fed. That has been the message since December last year. That was the big impulse we got last December. And it would be a reiteration of that at a critical time. And I think that the best playbook would be like we saw in December, where we saw this really surprisingly dovish pivot from the Fed. We saw 10-year yields actually rise in the following months because it said that they were worried about the economy, they were going to boost the economy, and they were complacent on inflation, and ultimately it was supportive for risk assets. So that is the main takeaway if they do 50 basis points today.
Mark, the economists, your favourite people, say they're going to go 25. What does the market do in that environment?
I will give the economists a little bit of leeway here, that I think a lot of their forecasts have been potentially put in before the communication of the last couple of weeks. If you asked me 2 weeks ago, in fact, I was asked in the show 2 weeks ago, I thought it was going to be 25 basis points, but I said it was still in balance. But many people out there believe that the communication in the last couple of weeks has been deliberate. Now, whether that's true or not, it doesn't matter. But now that we're pricing in 40 basis points, it would be more damaging today for the Fed to not deliver what is priced. And I think that as someone who doesn't think the Fed needs to cut aggressively, but they can't be whiplashing back and forth. I think the most positive message they could do now is deliver 50 basis points, saying it is about being proactive and preemptive, not because they're panicking, not because they're worrying. So it's true that officially the forecast is most economists don't expect 50, but I think some of those forecasts are a little bit stale.
So I suppose what you're saying is, what was the point of all the plants in the Wall Street Journal and the FT if they're not going to cut by 50 basis points today? And yet, if you think that the Fed's going to cut by 50, you don't see a recession. So how do they handle the messaging?
So I think we need to emphasise we don't know that there are plans. We don't know that's official kind of Fed communication. But I think that's a large perception in the market. But yes, given that there's a perception in a large part of the market that the communication, the guidance on pricing has been fed by the Fed itself, the Federal Reserve itself. Therefore, it would be disappointing if they suddenly didn't follow through right now. But I think that it's possible for them to say, hey, look, we see the softening in the labour market. We think inflation's under control, and to present a very powerful image. Message that, hey, this is them being proactive rather than panicking. But it does, again, send a message of an extremely dovish reaction function. That is positive for the economy. It extends the economic cycle, but it does fuel future inflationary worries. It shows that this is a policy that is much more, or a committee that is much more like that under Arthur Burns than under Paul Volcker. And ultimately, that will create longer-term inflation worries that people will be concerned about, and hence the curve will steepen aggressively.
OK, Bloomberg Markets Live Executive Editor Mark Cudmore, we thank you. And do remember, you can get up-to-date analysis and insight from Mark and his team. Just go to MLive Go on your terminal. Let's get to the stocks to watch now. Joe Easton from our equities team will take us through.
Morning, Lizzie. So we've got this exclusive on Reckitt. Ben Kisser from the Bloomberg Deals team today saying that the company is potentially pushing ahead with the sale of its home care assets business that has some of these home care brands that we see on the screen in its portfolio. Now, potentially, this is worth around £6 billion, according to the report. Financial investors and also other companies in the industry are looking at the unit, according to the article. Also, another side note is, according to Bloomberg's sources, they're also evaluating their Mead Johnson nutrition business. Now, this is really interesting, given that the Mead Johnson business is the one that's faced these lawsuits around baby formula in the US, around the health concerns there. And that's what spurred this massive drop in this stock earlier in the year. So potentially a bit of room for a rebound. Most analysts, though, are pretty positive on this one. We can see a lot of buys, not a single sell, 11 buys, Reckitt in focus today. Then the other bit of M&A news is Continental. Now, the company pushing ahead with pitches for its auto spin-off. Again, this is from the Bloomberg Deals team today. Now, they have invited investment banks to pitch on their role in this potential move. Now, you'll remember that Continental plunged last week when BMW issued a profit warning. That was partly due to faulty braking systems that were manufactured by Continental. Now, a lot of analysts said that this would mean Continental would delay this spin-off. But according to the report, they're pushing ahead, so this is likely to be seen as a positive for Continental today. So we can see down almost 10% on a one-month basis. So potentially a positive one today. Then the big sector in focus is defence. We saw a drop in this sector yesterday. This was after a report saying that allies of Ukraine are looking at how a potential ceasefire in the war would look when it eventually, hopefully, does come. And we did see declines in all the big defence contractors, Rheinmetall, SAAB, BAE, Leonardo, some of the biggest droppers, down the most in 5 months. But there is a note from Morgan Stanley today saying our longer-term outlook for the sector remains positive, given the underlying drivers of rising defence spending are intact. So they say a less dependency on the US and also continued restocking should be beneficial. There's the 3-year gain on a defence index. We can see up 170% almost, potentially a little bit of downside to come, but holding on to massive gains in that sector.
OK, thank you to our equities reporter Joe Easton for some of these stocks that could be on the move at the open 8 a.m. UK time, and a sector dive in terms of defence there on reporting that some of Ukraine's allies are talking at least about what a ceasefire would look like. Switching focus, and pretty fundamentally, there is a story, and you were talking about this in the break, Guy, around prime real estate in the UK and property prices. I know you're affected by this because you've got your McMansion that's priced above 30 million. But here's the line coming through then. 20%, 22% fewer sales above £10 million in the UK, according to Knight Frank, in the period, in the 12 months to July. And one of these quotes stands out to me. The current market reminds me a bit of the financial crisis in terms of what I'm seeing, in terms of volume of stock available, price reductions and nervousness in the market from vendors when it comes to particularly London Prime. And some of this is about the budget, it seems.
I think a lot of it's about the budget and what is happening with the budget. This is non-DOMs maybe voting with their feet, and the potential impact of all the tax rises and the change in the tax legislation that Rachel Reeves is talking about pushing through.
Yeah, private schools as well. These are people behind these measures. I think it's less of a rate story. Surely you're not buying these properties on mortgages. But Jeremy Stretch was talking about the impact of the health of the housing market, giving the BOE confidence. I don't think that this is the same story, this prime end of the market.
No, I think the latest RICS data does suggest that we're seeing a significant pickup in asking prices coming through for houses. So the market seems to have come back to life a little bit, but it's been such a bumpy ride recently. Can we assume that the current upsurge more broadly in the market is something that is sustainable, with the budget still on track to deliver tax rises, CGT changes, all kinds of factors coming into the market mix as well? OK, we're going to talk about the market open, the equity market. It's about to open here in Europe. We'll bring the details in a moment. Wednesday, the 18th of September. Buckle up for a boring day. Nothing's going to happen. We are waiting for 2 p.m. Eastern, 7 p.m. UK time. We're going to get that Fed decision coming out. It's not going to affect Europe's session today. It will, though, affect tomorrow. FX, bonds obviously are going to have an interesting afternoon, I suspect, as we work our way towards that. Equity markets feel largely becalmed at the moment. Yesterday's session, this is the story. The white line is Europe, the blue line is America. Basically, we went out pretty much in line, as a result of which, Lizzie, not much movement this morning, I think, in futures.
Exactly. Treading water on Euro Stoxx 50 futures this morning, flat to the downside. FTSE 100 futures even lower, though. This potentially because of that UK CPI number earlier. A bit of a downside surprise on producer prices, but very much in line when it came to CPI. Interesting to see traders pairing their bets on BOE cuts, but the pound actually higher. But as we look towards the Wall Street session, futures pointing higher there. As you say, we look ahead to that Fed decision.
We will continue to yap about that Fed decision, as JP Morgan's Jamie Dimon says and accuses us of doing. Lift the hood. There are some interesting stories underneath the headlines, particularly when it comes to deal making. This on Reckitt. We're going to watch this company at the open, looking, according to our own reporting, to potentially spin off its home care assets. That could fetch £6 billion for the beleaguered consumer giant. The details on the Bloomberg around that. Continental, you remember that's tied up with the whole BMW recall around its braking systems. Took a big hit last week on the back of that. Still pushing ahead with preparations for a separation and a spin-out of its car parts business. So we watch Continental. And defence stocks as well could be on the move on reporting that some of Ukraine's allies are looking at a potential discussion around a ceasefire. Guy?
Yeah, we saw some of that yesterday in the market. The defence stocks pricing that story in. We'll continue to see maybe some of that again today. Here we go. It's time for the opening trade. These are the numbers that you see on the screen in front of you. The FTSE 100 is struggling to figure out exactly what kind of a session we are going to be looking at. Unch is potentially going to be the word of the day. Certainly for the European session, I don't think you're going to see much movement. As I say, buckle up for a boring day. There you go. Stock 600 is open. It is down by 0.02%. I don't think there's much when it comes to Europe today that we can add to these numbers. I think below the surface there are a few things going on. Lizzie, what are you seeing?
Yes, we have just had the CAC and the DAX opening pretty flat to the upside. But if we break it down by sector, you've got just over half in positive territory. Insurance and travel leading the gains, energy behind that, and telecoms. But bottom of the basket, healthcare and technology, food, beverages and tobacco as well. The biggest gainer, insurance, as I say, higher 0.2%, but healthcare down about the same amount this morning, Tom.
Some of the individual companies on the move. We talked about Reckitt, maybe looking at spinning off £6 billion worth of home care assets. That stock is currently up 3%. Interesting on iron ore, once again, softness in terms of that key commodity. You can tie that continued concerns around China and the demand there, but that playing out in terms of basic resources. Copper, iron ore, I should say, down at $90 a tonne, down almost 2%. So in terms of your sectors, energy actually just modestly up by 0.1%, but it is basic resources, and that largely down to softer copper and iron ore that is leading the losses, currently down 0.5% across your sectors.
Yeah, Joe Easton flagged to us that we should keep an eye on the defence stocks. Of course, they fell yesterday on the reporting about Ukraine's allies looking at a ceasefire. They're bouncing back today. Rheinmetall up 1.3%, Saab up 0.5%, Leonardo up 1.1% this morning, so recovering from yesterday.
Should we talk about the Fed a bit more?
Shall we again?
Should we yap a little bit more, as apparently we're being accused of? This is Jamie Dimon on Fed Cuts. Take a listen.
It matters to me because I have to listen to all that people yapping on TV all the time about something that's almost irrelevant. I mean, they're going to do it, 25, 50 basis points. It's not going to be earth-shattering. It doesn't mean that much. I mean, I think they need to do it. So I'm not, I think Jay Powell does do a great job. But it's a minor thing.
Let's carry on yapping. Fabiana Fedeli, CIO for Equities, Multi-Assets and Sustainability at MG Investments, sitting around the table with us this morning. Should we care? Does this actually make any difference? What is the message that we're going to get from the Federal Reserve today about the bigger picture, the global economy, the US economy? Is that what we should be listening to?
We should. And if you look at how the Fed has behaved until now, we think that a 50 basis points cuts is a little bit out of sync with what they've done and how they've conducted themselves. So we would expect a 25 basis cut and some discussion around, yes, the economy is weakening, but it's not that weak, it's still holding out well. And we are ready. We have other 2 meetings to go this year. So from that point of view, it does matter, though, because yields have come down quite a bit on expectations of a 50 basis points cut, and this could disappoint fixed income markets.
What signal is it going to send, though, about the economic health of America? Because this, I think, is what really a lot of people are trying to figure out right now. Are we heading for a recession? What kind of a slowdown are we seeing? Is it a soft landing? Is it a hard landing? Does today provide any clues as to where we are in that journey?
I'm not sure that the Fed is going to provide clues. I mean, we've seen the data. The data is weakening, but it's not really in panic mode. There's no reason to push the panic button.
Right.
And I think the Fed will just convey that message.
I'm interested in your BOE call. You actually see a 25 basis point cut tomorrow. That is not the consensus. We've just had the CPI numbers out this morning, very much in line with estimates, but traders even paring their bets on BOE cuts. I wonder why you actually think that we will see a cut.
Well, the economy is weak. The CPI has come down, is not at target rate yet. But I think some support for the economy at a time when interest rates are very restrictive would be warranted.
And what about after the budget? Do we get a more aggressive Bank of England if there's a fiscal tightening? Do you see UK equities holding up?
You know, that has always been the big issue between what fiscal policy does and then the response on monetary policy. We'll have to see what the budget brings. And I would say that the BOE will be very measured in its steps, but definitely will take into account what the budget does.
Do Treasuries look a bit rich at this point? And if they do you allocate out of Treasuries and into UK gilts?
Great question. They do, and we have. So if you remember, just before the summer, we issued our second quarterly outlook, and we said this is actually a better market. After having been extremely extremely convinced about our equity versus fixed income preference for a while, we said, well, now is when if you want, the odds are moving towards the fixed income market. But the fixed income market has moved really fast, particularly in the U.S. So we still overweight duration, but we have moved some of the capital to UK gilts and credit because they moved much less than the U.S. paper.
On the equities front, where are you finding pockets of outperformance in this environment?
Look, first and foremost, there's still pockets of outperformance. There's still places where you can make a larger performance than you could in fixed income markets, and that's good news. Think about all those equity pockets that have actually been negatively impacted by the higher for longer fear. One of them is in the infrastructure sector. Utilities have already started to run up. You've seen that, but there's still some to come. And then one sector that has been very unloved for a long time is renewables. That has been impacted by higher interest rates. Some areas are still impacted by supply glut. You saw some recent news, and by difficult balance sheets. But there are some stocks that actually will benefit from a better sentiment on rates.
Can you answer me a bigger picture question? I've got a euro trading at 111 versus the dollar. I've got European equity markets looking really strong, like near record highs. DAX is doing really, really well at the moment. Yet I listen to Mario Draghi and I'm hearing existential crisis. Europe really is in trouble right now. We need an economic plan that's going to get out of this fast. Otherwise, we are in serious trouble. I'm struggling to match the market narrative with the narrative that I hear and see on the ground daily out of the German economy. And I listen to Draghi, and he sounds desperately concerned. Why do these two things not match up right now?
Well, first and foremost, Mario Draghi is looking at the longer-term picture.
Sure.
And longer-term, Europe has a competitive disadvantage. They need to move ahead with regulation. They need to support some of their industries better. They need to consolidate the banking sector, the telecom sector. There's a lot that Europe needs to do to be competitive on the longer term. Shorter term, we were all so pessimistic on Europe. The market was discounting so much ill in Europe, and so we actually are better than we thought we were. And that is what the market is responding at right now.
So if you see a BOE cut tomorrow, do you see an ECB cut in October?
I don't think the two are necessarily linked, but there is a possibility of an ECB cut in October. Always data dependent, but it is likely.
OK, well, we'll get more ECB speakers later on today. I also want to get the big picture on China, because I think you've been buying bits of China. Is that because you're banking on more China stimulus?
Actually not, but there is so much discounted in China in terms of the weakness in the market, in particular in the consumer. You've seen it now that even the high-end consumer is starting to weaken, which was, if you want, the last bastion of consumer health in the country. So we actually started buying selectively some consumer staples and consumer discretionary names. They generate very high free cash flow. They're giving it back to shareholders in terms of buybacks and dividends. And some of these stocks are healthy.
That did stand out from your notes, because it's so rare to hear anyone saying they want to allocate in any way to China. Where do you draw that? Do you draw that out to I mean, you want to be domestically exposed to some of those names in China. Do you also want to be exposed to the names in Europe that have that market share over in China, or is that still looking, you're not getting the valuation call there, they haven't been priced in yet? How are you thinking about the European play on China?
In general, we've talked about this previously in the program. We do prefer China names in China rather than the exposure from Europe. There's also a lot of competitiveness improvement in China towards actually their international competitors.
As I look around the world, though, I'm trying to understand how I should play this. The US economy still looks like it's okay, and the Fed feels dovish, and it's going to be cutting rates to try and keep the economic cycle lasting a little bit longer. Europe's got a multitude of problems right now, as has been laid out by Draghi. China looks like it's potentially entering a deflationary cycle. Do I start from the idea that I want to be investing in the best place at the moment economically, or has the market sufficiently discounted the risks elsewhere that is where the opportunity lies?
You know, if you think at, I assume that you're talking about equity markets now. And if you think about the longer history of equity markets, generally the economy and the market haven't necessarily gone hand in hand. There are other factors that actually will help stocks perform, and these are earnings. And earnings can be based on competitive advantage of companies, new technologies. We see a lot of that at the moment.
But all of those feel like they're still in the States. But OK,
I actually think they are pretty much in everywhere, and you just have to be very careful. So if you think about the market since July, actually among the top 40 stocks, best performing stocks in the MSCI ACWI, the majority was in India, wasn't in the United States. And only one of the Magnificent Seven, which is in India, was in the top 100. So the U.S. has lost a bit of its shine at the top of the equity market.
Yeah, and a 50 basis point cut from the Fed today could accelerate the flows into Indian equities, arguably, as well. Where are we in terms of the reset? You talk about the Mag 7. Where are we in terms of the reset around those AI names in that space?
You know, what is interesting is the market has been broadening. If you look at the top names performing across worldwide indices, actually most of them now are not anymore in technology. So the market is looking at the valuations of the Mag 7, valuations within the AI-related technology, and is thinking, well, there are other areas where actually I can find more value. And I think that can continue for a while.
Getting some headlines coming through from BI, our colleagues. Sees 20, I'm assuming this is what I'm looking at here, sees economic growth, well, basically it's signalling faster rate cuts from the Fed. So we'll come back and get some more details on exactly what is being signalled here. But the market is already positioned for 50 today. Is the expectation we get 50 today? Do we get more than 50 in the future, i.e. do we get a series of 50 basis point cuts coming out of the Fed? Fabiana, nice to see you. Thank you very much indeed for stopping by to see us. Fabiana Fedeli, CIO for Equities, Multi-Assets and Sustainability at M&G Investments. Let's take a look at the Core 6 this morning and see what is happening here, because what you do see on the left-hand side of the screen is a significant amount of weakness in Novo Nordisk, which has been oscillating quite significantly at the moment, but today the oscillation feels maybe a little bit greater, the amplitude a little bit greater. The market feels maybe a little defensive this morning. Look at what's happening with Nestle on the right, Novo Nordisk on the left. This is a pricing story about what is going to be happening with Ozempic, potentially in the United States, and the potential for cuts in the pricing of Ozempic. And that is being reflected in the price this morning, guys.
Yeah, I mean, this is what's... So the story is, and this is really interesting, because as part of the Inflation Reduction Act, as you were mentioning, it empowered the US government to be able to negotiate prices. And you had a senior member of the Novo team yesterday at a conference saying, essentially, we think we're next. Because they've already negotiated prices down by 38% to around 79% for 2026 for 10 of the world's biggest medicines as a result of this policy, the Inflation Reduction Act, and the powers that that gives them. And the expectation then is for the members of their own team, a senior vice president, in fact, speaking yesterday, saying that it is, and I'm quoting, very likely that Ozempic will be part of negotiations in the coming round, and we are ready for that. Maybe some investors not ready for that because you see the price action today, but that seems to be a potential headwind for this business. There's a lot of political pressure in terms of drug prices, clearly, in the US, and particularly as we lead up to the election in November.
Yeah, of course, we're going to have the CEO of Novo Nordisk testifying before a Senate committee led by Bernie Sanders about the drugs prices next week. So it'll be a continuing story. But let's check in on some of the individual stocks, other individual stocks that we're moving at the open with Joe Easton. Joe.
So one stock moving, Lizzie, is Campari over in Italy. We've got a shock resignation of the CEO from the drinks maker David Campari this morning. Now, the CEO only took the role 5 months ago, but we have seen a couple of profit warnings from this firm in recent months. And as such, we're seeing that change in leadership pretty dramatic on that one. It was in and out of a trading halt in the pre-market, and we are seeing it down 5% over in Italy. One of the worst performing stocks that we've got today. Then we've also got those deals news to look at as well. Reckitt was one of the best performing stocks in the UK this morning, potentially selling that unit of all those favourite brands, Sillet, Bang and the other home care products as well. That one is gaining 2%, potentially £6 billion worth of assets in terms of that one. Continental, not too much movement there, pushing ahead with the spin-off of their automotive unit despite that big slump that we saw last week. And just a little one down in the UK, mid-caps, Advanced Medical Solutions. It is a supplier to the medical sector, makes components, that kind of thing. Getting a takeover bid, according to Sky News yesterday, we're up 9%. On that one. In terms of share sales all over my screens this morning, and a couple that stood out was Moncler, a director of the Italian luxury goods company, selling some stock. Now, BI writing that is coinciding with a decline in luxury goods sales at the company that we've seen in the sector. And ISSS, the cleaning company over in Denmark, also seeing an investor selling some shares this morning. That one actually holding pretty steady today. In terms of defence, Lizzie, you'll has already touched upon it, seeing a bit of a rebound in most of those shares. Saab over in Sweden holding pretty steady at the moment, but Leonardo was one of the worst yesterday, coming up 2%. The focus on whether allies of Ukraine looking at potential routes to a ceasefire in the future. Definitely an uncertain situation, but that was why the sector was down yesterday. Mining, meanwhile, a bit of a rebound in that one. Now the sector is actually going the other way. I'm seeing those declining. I saw some pre-market moves higher earlier, but we are actually seeing more losses. As Tom mentioned earlier, iron ore futures dropping as much as 4% overnight. Chinese markets reopening following a holiday. Couple of broker moves to bring you. Firstly, in insurance, Goldman Sachs. Lizzie did actually touch upon this sector as well, one of the best performing sectors today. Lancashire up to buy. Goldman putting buy ratings on a lot of stocks, saying the Lloyd's of London market looking strong today. And finally, Commerzbank. This one gets an upgrade over at Barclays. No prizes for guessing why they're upgrading this one, but it's all to do with the UniCredit potential takeover. Only one sell left on this stock now for Commerz, and it's up 0.8% in Germany.
Sterling job. Joe Easton, thank you very much indeed. Adding some colour to an otherwise pretty morose day as we lead up to that decision from the Federal Reserve. Some interesting stories below the hood. Joe, thank you from our exit team walking through some of the stocks on the move this Wednesday. Coming up, Stellantis workers in the US are set to vote on a strike. More industrial action in the US. We took a look. Now, the labour market action, or at least the labour action, could impact one of the world's largest car makers. That is next. This is Bloomberg. Welcome back to the opening trade. We are 20 minutes into today's session. All eyes, of course, on the Fed decision. Currently, European stocks down just 0.1%. Now, it's a corporate story unfolding and a focus on industrial action. The United Auto Workers, the UAW, is asking members to greenlight a strike at Stellantis, escalating what is becoming a tense standoff with, of course, one of the world's largest car manufacturers. Let's get more details then and bring in Bloomberg's Albertina Torsoli for an update on what is happening. How big of a risk is this, then, this planned strike action? What could it mean for Stellantis?
It is a risk. Stellantis, is a big player in the U.S., the maker of Jeep, Chrysler, Dodge cars. The U.S. is the single biggest profit pool for the company, and the words by the union leader yesterday were quite strong. Stellantis has declared war on the American working class. This is what Sean Fain said, but of course he always uses tough words. Alleges that the company has backtracked on a deal made last year with the union. The company firmly denies this, but of course all eyes are on the North America business and the US in particular.
And Albertina, dealers angry too. Why?
Yes, there's been a strong letter last year by the leaders of the biggest, union dealer network, again criticizing Tavares for having brought rapid damage to the brands, not investing enough. The company has several problems in the U.S. and, Tavares has touched upon some of them: price and product positioning, inventory management. There's a class action in the U.S. and also high-profile departures at the company. The company says it's working on those brands, but yes, they've definitely had more difficulty selling Jeep SUVs at a time that, SUVs are all the rage. So a lot of focus really on this region and a big problem, a headache for the CEO of the company.
There's a great line that stands out from a story that's been written on this company by Bloomberg. Philippe Houchois, the Jefferies analyst, has a great explanation for what is happening at this company. With a single-minded focus on cost, Tavares has made Stellantis more efficient than competitive. I think that kind of sums up maybe where we are with this business right now. And talking of cost-cutting, the Italians are getting in on the act as well. The EV story obviously is hugely challenged in Europe at the moment, and it now looks like the Italians are going to pull funding for a planned battery plant. Walk us through the implications of this as well for the long-term competitiveness of this company.
Yes, there's been a long-standing back and forth between the government, the Italian government, and Stellantis. So, you know, problems in the US, problems in Italy, a lot of pressure points on Tavares right now. What is happening in Italy, though, also has to do with the steep EV slowdown that we are seeing in Europe. Customers are just, you know, not buying these EVs because the technology is too expensive. This is a factory that is being built by ACC, which is a joint venture. Two biggest shareholders are both Stellantis and Mercedes. But the clients have now asked for cheaper batteries, cheaper technology. And ACC just does not have this technology. So, you know, the government is reallocating those funds. This factory is not being built. Work has stopped on it, but it comes in the context of a lot of M-tier plants in Italy and production that has slumped in Italy for Stellantis, with the CEO shifting a lot of the production to lower cost sites in other countries. And obviously, the government of Giorgia Meloni has been eyeing this very closely and trying to put pressure on Tavares to build more and to recover, you know, some of that lost output, which obviously has huge implications for workers and for the industry.
Albertina, great coverage. Really enjoying reading it. Thank you very much indeed. Albertina Torsoli joining us on what is happening at Stellantis. Chris Bryant's story in the opinion section on your Bloomberg, really worth reading as well. Talking of industrial action, it does look as if we are going to see a continuation of talks which started yesterday between Boeing management and the IAM. This is a mediated conversation that is happening between the two, trying to resolve the issue that is happening up in the Pacific Northwest right now. Boeing potentially facing quite an elongated strike here at a time when the company desperately needs cash, desperately needs to deliver aeroplanes, and there's talk now of a massive capital raise being required, maybe quite a big capital raise, just to stabilise the situation from a financial point of view. Yeah,
Ken Herbert at RBC Capital Markets saying that Boeing's going to burn through about $500 million in cash each week that workers are on the picket lines, and therefore, as you say, you've got these various measures to try and preserve cash, the freeze on pay rises for promotions, the freeze on hiring, less money spent on air shows. It'll be less exciting when you go, Guy, and less money on charitable donations. I wonder, like, is this really the sort of strategy that you want to be pulling up the drawbridge when you're trying to improve morale? And
that's pretty desperate, isn't it? Charitable donations. The air shows will always be exciting because Guy Johnson will be there.
So, but I genuinely. Actually, you can draw a line between the car sectors here as well.
Yeah.
I think air shows are becoming less important. I have to say, having seen Farnborough this year, fewer people showing up, definitely. It seemed to be fewer. It didn't have the buzz that it did a few years ago. And I wonder whether these big kind of industrial events are fading in their significance.
$58 billion worth of debt at Boeing. We're seeing that industrial. Are we seeing more industrial action right now than we have done historically? We're seeing it at Stellantis, potentially. We're seeing it at Boeing. That's US focused. And can Airbus benefit? Is this one area of the industrial chain in Europe where we actually have a leg up, or at least the Europeans do?
Yes, but Airbus is facing its own challenges. It's got the Pratt & Whitney engine issue, which is hugely problematic. It's got a supply chain which remains hugely problematic. It's trying to ramp up production. That's proving difficult. It also has a labour issue. Trying to bring enough skilled people into this segment of the industrial base of Europe at the moment is hugely challenging. Anyway, we'll continue to monitor what is happening up with Boeing and Seattle. Up next, we're going to talk about what the next commission is going to deliver in Brussels. We'll have that conversation next. This is Bloomberg.
This is the opening trade. We're 30 minutes into today's session and not much doing across European equities this morning. The Stock 600 lower 0.2%. The FTSE 250 lower 0.25%. If you look at it by sector, about a quarter in positive territory. Basic resources still bottom of the basket, but the pound still higher after that UK CPI reading came in pretty much in line with estimates, even though you've had traders pairing their BOE bets. Treasury yields still pretty steady. Wall Street futures pointing a touch higher as we head towards this Fed decision. Let's get away from the markets and into the politics. The European Commission President Ursula von der Leyen laying out her ambitions for restructuring the EU executive arm yesterday. But in the next few weeks, she really is going to face the challenge of parliamentary hearings. So let's look at this in more depth with Bloomberg's Oliver Crook. He joins us now from Berlin with all the details. Ollie, what are we expecting from these hearings?
Yeah, so listen, this is a very long process, Lizzie, that began on June the 10th when this election took place within Europe. And of course, it precipitated a great many events across Europe, including basically the French government, Macron dissolving it and then calling it back into action. We now got all the commissioners. We've got the shape of the commission going forward, but it's not over yet, right? We still need to go into committee. We have to have the parliamentary sessions sign off on these names that have been put forward. Again, there's 24 of them or so that have been put forward. Some of them might get sent back, so you have to go back to the drawing board. And if Ursula von der Leyen wants to keep her timeline intact, which is cutting it kind of close right now, of November the 1st to have the full commission there, we need to get this process moving very quickly, because once they've sort of deliberated about all of these candidates moving forward, what they need to do then is vote on it, and then that will be the final sort of step there. So listen, there's been a lot of this horse trading done in the background. What Ursula von der Leyen does not want is a huge sort of open brawl about this coming out into public. So really what they wanted to do is solidify these names going forward. And again, this is going to be absolutely crucial for a European Commission, which also at this moment, as you know, there's been a lot more Euroscepticism that's even been voted into the parliament. So there is definitely some tension there. And as I say, nothing of the tension that's happening in the domestic politics of both France and Germany, where, again, you see that Euroscepticism going up, which will make it a little bit more difficult potentially on the procedural factors here, but also longer term in terms of what they're trying to do with this European Commission and the Draghi report, and really trying to get a bigger and stronger Europe rather than a weaker and more fragmented Europe.
Oliver Crook in Berlin, thank you very much indeed. For more on this story, we're joined by Daniela Schwarzer, Executive Board Member at Bertelsmann Stiftung in Berlin. Daniela, thank you very much indeed for taking the time to join us this morning. What message is Ursula von der Leyen sending with her new commission?
Well, she gave the Commission a clear theme. She said that this Commission is about the double transition, digital and green transition, in a new geo-economic or a tougher geo-economic environment. So with that point, there is continuity to her first term. But now she has given us some surprises, basically, yesterday with the choice of vice presidents. She has put a number of women there who weren't expected to get those jobs. I think that is a clear signal to member states, because she asked all of them to propose a man and a woman for the top jobs. Some of them didn't, the latest example being France, where Thierry Breton withdrew, and then the current foreign minister was proposed as commissioner. No woman in the mix from the French side. So I think she sends a clear signal to the member states that she still, despite all the constraints she has, that she is trying to design her team in a way that she thinks works for Europe. But what we also don't really know is, when you look at the chart with all the faces and the areas of work, who actually reports to whom? They're vice presidents, but you don't really know which the teams are that they work with.
Does this commission resolve the Draghi question, which is that Europe ultimately faces, the EU ultimately faces an existential threat unless it becomes more competitive? Is this the commission that is going to deal with the Draghi question? Is Draghi right at this point to raise the bar so high? Can Europe deliver on what he hopes?
First of all, Draghi is absolutely right, and the report was well timed. First of all, he gives a very sober but realistic analysis of the current economic situation in the European Union, which has two sides. One is there's a huge potential to live. We can do much better than we do. And the other thing is we have underinvested. We haven't done enough for research, innovation in terms of tech. We are lagging behind. We don't have the funding instruments in place, neither public nor private, that we need to catch up and to be a leader again. And the European Union, with its role in the world, it's very much based on its economic power. This is why the report is not just about economics and growth. It's really about the question whether the European Union will be able to stand its ground in a way that is getting more competitive, that is getting more conflictual. And so I think the Draghi report is absolutely right. And Ursula von der Leyen, she has sent some signals. For instance, the introduction of a commissioner for defense industry, that is an important point. This is not because member states will give their defense policy to the EU, no, quite the contrary, but the industrial base needs to be developed within the European Union. Secondly, the focus on digital, I think that is also good news that she has put a prominent person into that role from Finland who has a lot of knowledge on the issue. So I think we will see some movement, but at the end of the day, it will be the Commission and the member states that need to tackle the problem. And the main thing is that countries need to understand that they are better off if they cooperate on those competitive issues rather than drawing up borders and trying to do their own thing.
Countries need to understand that they need to work together on these issues. You said the signalling is there, the report is there, Daniela, but if you look at this kind of nativist shift in Germany around the AfD, arguably at least the nationalist shift as well, and you're seeing that reflected in France, so how realistic is that? When they need to stop talking and stop signalling and actually start working on this, but how realistic is that given the domestic politics of France and Germany and others?
It's very true that we have seen a rise of far-right populists, and by the way, not only on the national levels, but you also see a certain shift to the right in the European Parliament. But that doesn't mean governments will give up or that those issues will go away. Europe is under huge pressure if you just compare our competitive situation with the United States or China, which are the other large markets, and Europe can still catch up with those. The answer, in my view, is to find a new balance. There's a lot of criticism of the European Union at the moment that it overregulates, that it's interfering, that it's actually limiting the competitiveness, in particular of small and medium-sized companies. And that is also something that Ursula von der Leyen has acknowledged, and I think change will have to happen in that area as well. And then on the other hand, there are things going forward. For instance, look at the French initiative to host an AI summit in February. The domestic situation in France is, of course, as tricky as we know. There's no government at the moment. There's a prime minister who has to put together his team. But at the same time, things are going forward in the ways that the president can push them. So I think European politics in general over the next 5 years will be maybe at some points slower, but we will see progress because I think the acknowledgement now is there, not only through the Draghi report, but also through the Letter report on the single market, that really, given the competitive situation on a global scale, the best thing to do is to work closely together in some areas where it's of mutual benefit, and maybe to do a little less in others. And that is a possible and good narrative that those who understand the EU is of strategic importance can actually bring to national audiences. And that will make life for those anti-European voices who very often play with populist rhetoric and are really not very convincing. If you look at the fundaments of their positions and their concrete proposals, I think their life may get more difficult if the European Union and national capitals agree on some priorities.
Daniela, just back to the lineup and specifically on France. We're talking about Stéphane Séjourné's role. I wonder if you agree we shouldn't underestimate the impact that he can actually have in this role. How much of a player you think he can actually be?
Well, I think he can be an important player. He is not someone known for the issue of industrial policy. He's been foreign minister lately in Paris. However, he is very close to Emmanuel Macron. And I think in this current situation, that is important to acknowledge because Macron has been pushing the European Union to do more in standing its ground in international competition. He has focused on foreign and security policy, but he has also focused on industrial and economic policy. And so Séjourné, he's covering one of the key issues of the Draghi report. He won't be able, of course, to do this alone, and this is why sort of below the level of the European Commission, it is, or behind in the backdrop, it is extremely important that France and Germany work together very closely. If the two major economies of the Eurozone cooperate and get a joint approach, that is almost 50% of GDP, and that's not unimportant to know.
Daniela, the history of Europe over many years has been that Europe needs a crisis in order to fix itself, to take a step forward. Is this a crisis, or is the crisis coming?
we have had a number of crises, and some of them are still in effect. If you look at the latest security crisis, that is in full swing. That is Russia's attack on Ukraine as an independent country and its sovereignty being violated in Europe, very close to the EU's borders. So we have a security crisis. We have the need to invest more into our security and security order. And that is one of the themes that will be on decision makers' minds for the next 5 years. In terms of economy, we are not in a crisis, but we are in slow decline. And we know the vulnerabilities also of the Eurozone are known. We also know that we are not lifting the full potential. Think about Capital Markets Union and the need to deepen the European capital market. So I hope that we are at a moment in time where there's a realization of the weaknesses before they turn into a crisis. And I do think that with the Draghi report and some of the political reactions that have been out there over the past few days, we see that the sense of urgency has grown.
OK. Daniela Schwarzer, Executive Board Member at Bertelsmann Stiftung, on how to think about changes at the top of the European Commission and those competitiveness challenges. Daniela, thank you. A redhead crossing the board right now, been waiting for this. This is a breaking news headline then around Google winning its bid to topple a close to €1.5 billion antitrust fine over advertising. We've been watching for this, of course, after the EU Commission won that significant victory last week around taxes owed to Ireland, or at least taxes that Ireland arguably didn't want, but around €14 billion. That was a victory for the European Commission. On this news, Google has actually won, much smaller amount, but winning that bid to topple, to push back on that €1.5 billion in terms of antitrust fines. This is over advertising in the European Union.
As you say, the Commission has had a series of victories over the last few days. This is one that goes in the opposite direction. But nevertheless, this just going back to the story we were just talking about, this speaks to the idea that Europe is a regulator, that it has this perception of being the regulator rather than being the innovator. And it goes back to this bigger picture story of how Europe wants to be represented. Is that the true reflection? It has I think I read somewhere this morning a nice line talking about the fact that Europe basically just has a PR problem. It is perceived as being the regulator and being of stifling competition and stifling size and scale rather than being an institution that is promoting that.
Which is surely the point of the new lineup from von der Leyen, to put the emphasis from competition onto competitiveness and enact the Draghi report. But as Daniela was saying, it's really about who reports to whom and whether they can actually make that happen.
And to your point as well around how you frame this, the PR of this, I was speaking to someone who has a close sight on these things, saying that actually the regulatory framework in Europe provides certainty for businesses and investors. You're seeing regulatory frameworks pop up across the US in different states when it comes to things like generative AI. So you have different regulations in New York versus Arizona versus California. That makes it really, really difficult. In Europe, you have the EU AI Act across the Union. But that gives certainty and clarity, is the argument, the counter-argument. But that it's not framed in that way, to your PR point.
It's seen as being anti-size, and that is kind of where the argument starts. If you think about companies like Google, why doesn't Europe have a Google? It's because we don't want to create something that has been that big. Vestager is pushing back on this whole kind of Draghi report as well, saying that size isn't necessarily the answer and that we need to be careful that we maintain competition. Then you think about what is happening in the banking sector and what's happening with the consolidation there. That's something we need to think about. She highlights Siemens and Alstom as being the two kind of companies which are doing fine, but many people argue should have been put together to create a national champion, a European champion in that space. And it's kind of which way you approach the problem. Do you allow the scale to happen? Do you then need a regulator for it? Or do you not allow the scale to happen and then you don't have the problem in the first place?
OK. Well, let's get back to the Middle East politics now, away from Europe. You did see a bit of a reaction in the oil price. It's now lower 0.75% at $73 a barrel. But this is after the Iran-backed group Hezbollah is accusing Israel of orchestrating an attack that killed several people and left almost 3,000 wounded in Lebanon. A string of medical emergencies were reported across the country following the mysterious explosion of thousands of pages. We can get more detail now from Horizon's Middle East and Africa anchor Jemana Besetchi. She joins us now. Jemana, what do we know about these attacks via the pages?
Yeah, well, it was a pretty remarkable afternoon in Lebanon. At around 3:30 p.m. local time, what we saw was a series of these handheld pagers explode simultaneously across several cities within Lebanon, injuring 2,800 people per the Lebanese Health Ministry. 9 people were killed, including 1 child. And then also the Iranian ambassador was injured too. A short while ago, the Iranian embassy actually had to put out a statement saying that he is progressing well in his treatment, therefore confirming that he also was harmed in the simultaneous explosion. Per Hezbollah spokespeople, this was the largest security breach that the group has ever seen. They were very quick to point their finger at Israel, blaming Israel fully for the act that was put forward yesterday. And indeed, those were followed up by comments by the Lebanese Prime Minister, Najib Mikati, also putting the blame on Israel. It is important to note, though, that Israel has not said anything yet. They have not officially commented. But of course, this does open up a new type of warfare in that Lebanon-Hezbollah warfare that has been going on, the daily exchange of crossfire, in the sense that it's moved on from a hot war to a cyber war. And one of the other questions that people have been asking is, why were these Hezbollah operatives using pagers to begin with? And this all goes back to a speech that Hassan Nasrallah, the chief commander of Hezbollah, gave back in February, where he warned operatives of using their mobile phones because of the potential of them being hacked or intercepted. So he encouraged them to move to this lower technology platform of pagers. But of course, yesterday, as we saw, there was a massive security breach.
Yeah, Jemana, so from a hot war to a cyber war, but one with very real human consequences and impacts, of course. What do we know? There was some debate as to whether or not this was the Israelis allegedly remoting in and using the batteries to overheat. That seems to have been dismissed by most analysts. What do we know about what may have happened here in terms of compromising these devices?
That's right. So cyber security experts are very quick to weigh in here. It is also noteworthy that Al-Akhbar, which is a news outlet that's very close to Hezbollah, said that the group had received a shipment of pagers just a short while ago. So these were new pagers that had been brought in. And then a couple of theories came through. First of all, we had some comments. Bloomberg got some official comments from the telecommunications minister in Lebanon. He said that the cause of the explosions were the batteries overheating. But many cybersecurity experts say that that is unlikely. It is unlikely that these could have caused that much damage. The other more likely reason for the compromise of these pagers is that they would have been tampered with at the time of manufacturing. Now, what we have heard is from the Taiwanese company that originally would be the manufacturer behind these pagers, and they have said this morning they did not manufacture these specific devices, but what they do think is that one of their distributors within Europe would have somehow had the manufacturing process compromised, which is why these small explosives, just 10 to 20 grams, would have been placed in the devices that allow them to combust simultaneously. So really a high intelligence operation going on here, and it seems as though there were many different parts of the process involved.
Jemana, thank you very much indeed for the update. We'll continue to monitor the fallout from what happened yesterday. Jemana Pasechi, Horizon's Middle East and Africa anchor, joining us out of Dubai. We'll leave you with a live shot of the American University Hospital in Beirut as we continue to think about what has happened here and what it tells us about whether or not we're going to see escalation or de-escalation as a result of yesterday's events. This is Bloomberg.
Welcome back. We are joined now for a market view as we lead up to this Fed decision by Raphael Thoa, Head of Capital Markets Strategies at Tico Capital. Raphael, thanks for joining us around the set this morning. What is going to be more important for this Federal Reserve? Is it the size of the cut or is it the statement and what we hear from Jay Powell?
I think, Tom, you're right to start with this. You know, we are focusing a lot about the headline news. Is it going to be 25, 50? Obviously, it matters. But there is many more ways for the Fed to carry a message. Is it going to be about the statement, the supplemental, the press conference? So the key question is indeed how much, but also why. Is it because the economy is a mess and the Fed is worried. On the other hand, is it going to be a more reassuring message about, inflation coming back down, good time to start processing? So 25 and 50 indeed, but also what's behind matters.
So what is the calibration that's going to be best for equities?
That's a tough one. Back to this idea of message, in a way you can argue that if the Fed can convey the message that, the economy is okay, we're not focusing on a hard landing now. This is a normal process of normalizing the policy because it is indeed now very restrictive and getting more restrictive by the day, by the way. Then I think the market can be okay and just hug along with this idea that,
Is 50 okay with a soft landing? If they go 50 today, can they make the statement to keep us in the soft landing camp? Can they deliver that kind of statement, that communication?
Yeah, I think it's going to be a fine line. I think it's going to be about Jay Powell carrying the right messages. But I think the market is willing to hear that, yes, there is no reason to panic when you look at the hard data and that the Fed is just processing its normal course as it said it did.
Raphael, if I can steal us away from the Fed for a moment, we just had Fabiana Fedeli on telling us that the BOE is going to cut tomorrow, even though we just had all this UK CPI data in line. If the Fed does 50 tonight, does the pound strength mean that the BOE needs to follow tomorrow?
So needs to follow is probably a strong statement. Clearly, central bankers are watching each other. It does matter, including for FX. That said, the BOE had a cut in August. It was a fairly hawkish cut when you think back. Years of resilient inflation, sluggish growth, and clearly for the BOE, probably better to wait. Employment numbers were pretty strong last time around. And there is also an argument that the speed limit for the UK economy is rather low, meaning that there is no spare capacity. So very quickly, when growth picks up, inflation can pick up on the back of that too.
Are markets underestimating how far the ECB will have to go?
So that's a good topic too, because obviously you have similarities for the ECB, sluggish economy, slowing down pretty hard, and it's been quite a few months too. But at the same time, inflation is not behind us just yet. When you look at services inflation, the strength of the job market, there has been some disappointment. It's still a fairly steady disinflation trend, but arguably, then the ECB will have to juggle those two sides of the story. And I think back to, the 25-50 conversation, there is what they're going to do, and there is also what they should do. And maybe the forest behind the tree here is that we have a global slowdown.
Okay.
And this slowdown will probably require at some point to pick up the pace.
The problem with all of this is that the US economy feels like it's okay right now. The European economy feels like it's a mess, and Draghi is flagging that. Is Draghi being overdramatic in terms of the risks that reside here in Europe? And if he's not, we clearly need action right now in a big way, and I'm wondering whether the ECB should lead that.
Yeah, the monetary policy will be part of the answer for sure, and it is happening as we speak. I think you're right to mention Draghi. This is a big deal too. On the fiscal front, on the political front, something has to happen. And you know what? Maybe something will happen. At Tikeo, we are very much buying into this story of European sovereignty, something we discussed before, this idea that, yes, something is brewing, there is a political will to make something happen. Draghi, you saw von der Leyen cabinet more recently. All of those people are willing to take action to make sure that Europe can somewhat catch up to the rest of the world.
Raphael, great to see you. Thanks for stopping by to see us. We greatly appreciate it. The Fed is the firm focus. Some great coverage coming up throughout the day. We're counting you down to that important decision. This is Bloomberg.